the ECB has been pretty clear as it wrapped up last year, saying it wanted banks in Europe to refrain or limit these payouts to shareholders. Why do you think that's going to change anytime soon?
Well, first, thanks for having me, and good morning to everyone. The ECB made it very clear that the intention is after September, if the uncertainty has dissipated, to allow banks to resume the normal course of business. So that's the good news coming from the ECB later in the year, last year. In the short term, they have allowed banks to give payments up to a certain limit, and that's exactly what we're doing. So for 2020 fiscal year, we are going to propose to our AGM to give a 5.9 euro cents per share dividend. So that's the maximum allowed by the ECB. 2021, we intend to resume the normal payout policy of 35 to 40% dividend payout, which we have traditionally had at BBVA. And then we're in a very special position. We have an unparalleled strength in our balance sheet because we sold our US franchise to PNC in 2020 for $12 billion. Very attractive valuation. This provides unlocks tremendous value for our shareholder, gives us excess capital to the tune of 8 billion euro on top of our target capital. So the intention is to deploy that capital profitably through growth, through cost restructurings, and through sizable returns to shareholders. And in that context is our objective. We're targeting a 10% share buyback later in the year.
Let me dig a little bit further into bad loans, because at this stage, a very low rate, around 4% at the end of December. We've covered much higher levels in the past when we've spoken about the banking problems in Europe many years ago. I want to ask, though, what happens from here, because already there's been some criticism about how European funds will be spent, whether the targeted programs that we're seeing governments trying to achieve at this point, whether they're enough, and whether there could be money that'll be misspent along the way, not having the same growth impact. Do you have concerns then that bad loan number starts to grow down the track as we see the ramifications of that stimulus money being spent?
There is a lot of uncertainty given the uncertainties we have around the health situation, which is the driver really of a potential problems down the road in NPLs and on the economic front as well. So here we have a recession that is caused by the virus. So the first thing is, we don't know when the vaccines are going to be deployed effectively and we're going to be out of the woods in terms of the pandemic, which is really the priority for everyone. And here at BBVA, we really have taken a step forward to support society at the dire times that we have had last year and that we continue to have. But having said that, we have seen massive support programs, massive monetary stimulus, and all of that has really supported the economies in these difficult times. And what we have seen, for example, at BBVA, part of our step forward has been giving moratoria. We've given 38 billion euro of moratoria across the footprint where we operate. About 90% of that has already expired, and we have not seen a pickup in NPL. So most of those loans, 80% of those have resumed payments, which is a very good sign. But again, as I say, we have a lot of uncertainty. We'll have to see what happens in terms of how the double dip, so to speak, might be here the early part of 2021 because of the second or third waves of the pandemic, and then how strong the recovery is going to be, the rebound in the later part of the year, which we believe there will be a strong rebound. So if we had very significant drops in GDP in 2020, we're looking at quite positive numbers for 2021, but with a lot of uncertainty. And regarding the European funds, it's not so much intended to protect the NPLs or to support in the short term, but really to drive the transformation of the European economy so we can have longer term growth, which is very much needed, this longer term growth, in order to dilute the big debts that we are accumulating because of the fiscal stimulus. Fiscal stimulus is needed, but we need long-term growth, and we need to do that through a bit of public money that can catalyze private investment. Really, the role of public money should be to catalyze private investment, which will eventually drive growth. And we have the digital, we have the sustainability efforts. Those are the two axes, by the way, of our strategy that have been vindicated through the crisis. And there's lots of opportunity to transform Europe's economy to a sustainable world from the social side, from the environmental side, and also leveraging digital.